Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or in any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, New York coffee. The market right now continues to be the story of two bearish pitchforks and possibly an influential neckline extension. The first bearish pitchfork is the dark blue breached thrice and repaired, possibly thrice, early February to early March bearish shift pitchfork. We are right now a little above the dark blue lower time, currently at 293.15, as well as in between a small band of congestion, overhead between 301.55 to 303.45, and a larger stratified series of supports below, starting at 290.85 and stretching down to at most 252.25. The second pitchfork is the more recent and larger bright red early February to late April bearish Andrews pitchfork. On this one, the market is right now just above the declining middle time, currently at 293.15 also. Then there are the two moving averages overhead, or I should say there were the two moving averages. The first is the short medium moving average, currently at 336.30, which runs just under the dark blue upper time, which is currently at 347.90, and which 7 weeks ago and on occasions since helped, along with the upper time, to cap the market with a horn top pattern back at the start of June. The second moving average had not seen the market touch it since November 2023 until 5 weeks ago, when prices sliced down right through it. It is a slowly rising gold long moving average, currently 334.55. This moving average, along with the short medium moving average, were the market's senior participants. However, as I said earlier, 5 weeks ago, the market sliced down through the long moving average as if it wasn't there, so we will have to look elsewhere for support ideas. Thus I said 5 weeks ago, and I quote, "We might have a possible whole of 2025 very large double top pattern." Now this hasn't happened as yet, but is worth considering and especially remembering. Thus, whilst they are not targets yet, we might have a primary potential down in the 263 even zone and a secondary harder to reach potential down in the 229 even zone. End of quote. 5 weeks ago, prices pushed down below the 325 to 320 even support zone, then down through the next support zone between 309.90 to 310.80, made up from the May 2011 high at 309.90 and the 50% Fibonacci line of the May 24 to February 25 move at 310.80. And as I said 4 weeks ago, and I quote, "This now formalizes the targets below the primary target X down at 263 even, and a secondary harder to reach, seemingly much harder to reach target X1 down at 229 even." End of quote. We're seeing prices carrying on pushing lower, down through a small congestion zone between 301.50 to 303.40, as well as the rising purple neckline, currently 306 even, then back up over it last week, and then this week down below it again, of the small August to October 2024 head and shoulders continuation pattern. Now, I discussed the stratified supports below 4 weeks ago when I said, and I quote, "The beginning of various stratified supports from the September 2011 high at 290.90, quite mildly spaced to have it say, until the congestion at 252.20. End of quote. It is this stratified supports that finally slowed and stopped, for now, the move lower 2 weeks ago. However, today we are once again pressing lower, though with seemingly less ammunition this time. Finally, there is something else I'd like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 19 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly or longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025, when I last reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom, a bright red neckline on my daily chart, or my monthly chart I should say, currently at 275.20. The break higher over this neckline has already reached its primary target on the upside, but there was a secondary, much harder to reach target X, up at 433.35. What was interesting about this secondary target is that nearby is the next 100% projected Fibonacci line at 433.75, quite close in the scheme of things. Prices did indeed turn higher at this key combination of the 100% projected Fibonacci line and the target X at 433.35, dropping through and closing below the important 50% Fibonacci line at 347.20. Thus, for the first time in May this year, it closed back down below the dark blue upper line, currently at 282.60. And that's of the interesting 2019 to 2023 bullish Andrews pitchfork. Since then, we have dropped down further below the dark blue middle time, currently at 306.90, and in July we've dropped down, but so far rejected the bright red neckline. It will be interesting now to see the market's longer term reaction to this bright red neckline below. London coffee. Towards the end of May, the market breached and then broke down through what was a large, shallow bull channel. Prices carried on lower, and as I said of this bearish pressure 12 weeks ago, and I quote, they now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above. End of quote. Well, we now not only have the overhang pressing lower, but also the impactful force of the break below the shallow, large bull channel. Thus, for such a break lower, we had a primary target down in the 41.64 zone, reached 6 Fridays ago, and a secondary, harder to reach target down at the 35.15 zone, reached 4 weeks ago, plus a tertiary, much harder to reach target X2 down in the 28.60 zone, which is still live. So what do we have in the way? Well, I recently drew a bright green mid-February to late May bearish Andrews pitchfork. We did have the bright green lower time available as support for a while, and that's currently at 34.14. But 5 weeks ago, prices pushed and closed below it, though we have seen a resurgence back up over it, though in truth I suspect it is now acting more as an attractor rather than a declining support. And today we are totally below it right now. In the meantime, prices also pushed down below a pair of interesting 50% Fibonacci lines. The first is from the November 21 to February 25 move at 38.08. And the second 50% Fibonacci line is from the May 21 to February 25 move at 36.49. It was, as I said 7 weeks ago, and I quote, if we manage to break the August 24 low and the congestion that is just above it, then I am not sure how strong these 50% Fibonacci lines below will be. End of quote. And that became the reality, as they are now resistances. I also said 4 weeks ago, and I quote, we have some congestion at 35.53, but I think a move down may be on the cards. Then we have a fairly free zone below down to the combination of the January 24 high and May 2024 low, both in the 32.59 to 32.61 zone. End of quote. Now this zone between 32.59 to 32.61 halted the decline last week for a sharp pullback up last Monday, though it was capped by some congestion later on at 35.53 before spending the rest of last week and this week heading lower. Is this enough on the downside, is the question. Well, we have some congestion down here from January to February 2024 in this zone, but I am not sure, as the bearish pressure is quite large and that one day turning higher, however good it may seem or may be, well, that was never going to be enough. It was, as I suggested last week, that the recent move up was just a dead cat bounce. So, caution.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit. you.